Welcome to XRP Pro Ledger, and today we are going deep on something that is creating confusion across the entire XRP community right now. XRP dropped 4% today, from approximately $1.32 down to session lows near $1.27, breaking through key support at $1.28, testing levels not seen since February of 2026. And the community is asking the same question it always asks when the price drops. Why is this happening when everything else looks so strong? I want you to stay with me through this entire breakdown, because at the 7-minute mark, I am going to show you exactly why the same day that XRP broke through $1.28 support, the math behind the Clarity Act tells a story that the price chart is completely ignoring, and why 294 members of the United States House of Representatives already told you something 9 months ago that the current price does not reflect. But first, let us establish what actually happened today, because understanding the cause of the drop is just as important as understanding why it does not change the structural picture. Today's 4% decline is not an XRP-specific event. It is a crypto-wide liquidation driven by broader risk-off sentiment, heavy selling pressure across the entire digital asset market, institutional deleveraging, and macroeconomic uncertainty combining to push crypto prices lower across the board. XRP ETF inflows stalled today. No net positive flows were recorded. The institutional accumulation that produced 0 outflow days across the entire month of May paused on May 28th as the broader market sold off. This is the pattern that has defined every major consolidation phase in XRP's history. The structural bull case does not change. The price chart reflects short-term market dynamics, and the gap between short-term price action and structural fundamentals is exactly where patient capital positions. Now let us talk about the 294 number, because this is the data point that most people in the community have not fully processed. On July 17th of 2025, the United States House of Representatives passed the Digital Asset Market Clarity Act with a vote of 294 to 134. 294 members of the House voted yes, and here is the number within that number that changes everything. 78 of those yes votes came from Democrats. 78 Democratic members of the House of Representatives crossed party lines to vote for the most comprehensive digital asset market structure bill ever passed by a chamber of Congress. Let me put that number in context. The Senate Banking Committee vote on May 14th, the vote that sent XRP surging to session highs near $1.52, was celebrated as a bipartisan breakthrough because 2 Democrats crossed party lines to vote yes. 2 Democratic senators crossing was a historic moment. 78 Democratic House members crossed 10 months earlier. The bipartisan foundation for the Clarity Act is not fragile. It is the deepest bipartisan support any crypto legislation has ever received in the United States Congress. And the full Senate needs 60 votes to overcome a filibuster, meaning 7 Democratic senators need to cross party lines on the floor. 7 senators, when 78 House Democrats already crossed. When 2 Senate Banking Committee Democrats already crossed. When the political math at every level of the legislative process has shown that Democratic support for the Clarity Act exists beyond party line opposition. Now let us talk about what the Clarity Act actually does for XRP specifically. Because most people in the community know the headline, but not the mechanism. The bill introduces what it calls the mature blockchain test. Once a blockchain network is deemed sufficiently decentralized, its native token is no longer classified as a security under United States law. It automatically becomes a digital commodity under CFTC oversight. This is not regulatory guidance that the next SEC chair can reverse. This is federal statute. For XRP specifically, the mature blockchain test codifies in federal law what the Ripple court victory established in case law. The SEC's ability to reclassify XRP as a security through future enforcement action is permanently eliminated. And the bill includes strong DeFi protections. Non-custodial open source developers get safe harbor from money transmitter liability, meaning the builders expanding the XRP ledger's institutional infrastructure are protected from the regulatory risk that has been slowing adoption. The bill also contains anti-CBDC language, prohibiting the Federal Reserve from issuing a central bank digital currency directly to individuals or using it for monetary policy. This provision makes XRP and regulated stablecoins like RLUSD the de facto digital dollar infrastructure rather than a government-controlled alternative. Now let us talk about where the Clarity Act stands today, because understanding the gap between the May 28th price drop and the legislative trajectory tells you something important. The Senate Banking Committee voted 15-9 on May 14th. Chairman Tim Scott of South Carolina led the Republican bloc. Senator Cynthia Loomis of Wyoming, the Senate's most vocal crypto advocate, supported the bill. Senators Angela Alsobrooks of Maryland and Ruben Gallego of Arizona crossed party lines to deliver the bipartisan vote that moved the bill forward. The bill now sits on the full Senate floor, waiting for a scheduling announcement from Senate Majority Leader Thune. The August 10th Senate recess creates a hard deadline. The mid-July window is the effective last chance for passage in 2026. Today, XRP dropped 4%. The Clarity Act floor schedule has not been announced, and the community is conflating short-term price weakness with structural legislative progress. They are not the same thing. Now let us talk about the XRPL technical development that happened yesterday, because it adds a layer to the structural picture that most people missed in the noise of today's price drop. On May 27th of 2026, at approximately 3:49 in the morning, UTC, the Fix Cleanup 313 amendment activated on the XRP Ledger mainnet with 100% validator support. This amendment, part of Rippled version 3.1.3, automatically cleans up expired NFT offer entries during transactions, improves permission domain functionality, strengthens the vault and lending protocol infrastructure that institutional DeFi participants are building on XRPL. 100% validator support, not 90%, not 95%. 100% of the XRPL validator network upgraded and aligned before activation. That level of network coordination tells you something about the institutional confidence in XRPL infrastructure. Networks that institutions are uncertain about do not achieve 100% validator coordination on upgrade deadlines. Now let us connect today's price drop to the supply picture, because the 4% decline in price is actually visible in the supply compression data in a way that most people are not analyzing correctly. Exchange reserves have dropped from 3.76 billion XRP to approximately 1.66 billion XRP since October 2025. A 56% decline in liquid supply in under 8 months. When crypto-wide liquidations hit today, the selling pressure that drove XRP from $1.32 to $1.27 came from the liquid supply that remains on exchanges. The 68.5% of circulating supply in whale wallets did not move. The 900 million XRP in ETF custody did not move. The compressed liquid supply absorbed the selling pressure and produced a 4% decline. In a market with normal exchange supply, the same selling pressure would have produced a significantly smaller price impact because there would be more liquidity to absorb it. The supply compression that has been building for 8 months is now visible in price volatility to the downside as well as the upside. A compressed supply pool amplifies price moves in both directions. When the Clarity Act delivers the institutional demand catalyst, that same compressed supply will amplify the move upward. Now let us talk about what today's price action means for the ETF picture. Cumulative XRP ETF inflows remain approximately $1.3 to $1.41 billion since launch. The no outflow streak in May paused today as broader market pressure stalled flows. But here is what matters. The authorized participants who manage ETF creation and redemption did not trigger large-scale redemptions today. The 900 million XRP in ETF custody remained locked. The institutions that accumulated through zero outflow May did not exit on a 4% crypto-wide sell-off. That tells you something about the conviction level of the institutional capital that has been building XRP ETF positions through the entire Clarity Act legislative process. Now, I want to address something directly, because this community deserves a rational voice on what today's drop actually means and what it does not mean. A 4% decline on crypto-wide liquidation is not a signal that the Clarity Act is in danger. It is not a signal that institutional conviction in XRP is weakening. It is not a signal that the August 10th deadline is less relevant. David Schwartz has been consistent about this. The bull case for XRP is built on visible structural data, not on short-term price charts that reflect market sentiment rather than legislative progress or institutional adoption. The 294 House votes are real. The 78 Democratic House crossovers are real. The 15-9 Senate Banking Committee vote is real. The August 10th deadline is real. The supply compression is real. Today's 4% decline is also real, and it exists in the same frame as everything else. Now I want to talk about what most people in this community are getting wrong right now. XRP is trading near $1.27 to $1.30. The House passed the Clarity Act 294 to 134 with 78 Democratic crossovers. The Senate Banking Committee voted 15 to 9 with bipartisan support. 100% of XRPL validators aligned on yesterday's upgrade. 900 million XRP locked in ETF custody. Supply compressed 56%, and the community is panicking about a 4% crypto-wide sell-off. 294 House members do not panic on a 4% price move. 78 Democratic crossover votes do not disappear because of a crypto-wide liquidation. The math that the House wrote into the legislative record on July 17th of 2025 is the same math that exists today at $1.28. The price is lower. The math is unchanged. So let us zoom out and see the complete picture assembling right now. XRP dropped 4% today to session lows near $1.27. Crypto-wide liquidation. Key support at $1.28 broken. ETF inflows stalled today. XRPL fix cleanup 313 activated May 27th with 100% validator support. House passed Clarity Act 294 to 134 on July 17th, 2025. 78 Democrats voted yes. Senate Banking Committee 15 to 9 May 14th. Also Brooks and Gallego crossed party lines. Full Senate needs 7 Democratic crossovers. Senate recess August 10th. Exchange reserves down 56%. Whale wallet 68.5%. 900 million XRP ETF custody. Standard Chartered 2.80 base case. Analysts projecting $5 to $10 full Senate passage. 294 House members already voted. 78 Democrats already crossed. The price is $1.28. The math says something completely different. If this analysis changed how you are thinking about today's price drop and what the 294 vote math actually means for XRP right now, hit like and subscribe. I drop deep dive breakdowns like this twice a day to keep you ahead of the move.